So welcome everyone. This is my new series called Trading Grounds for SMC Concepts. My name is Feo. I've been trading for like 1.5 years, and I just want to dumb down concepts for you guys watching with smart money and ICT, because I've seen thousands of comments under bigger YouTubers' videos wondering how they basically execute their trades, what they look for in the markets, and a lot of questions were flooding into me asking about how an FEG works, what I look for in an entry, to basically give more info on liquidity sweeps, to give basically just the whole strategy and the execution to every person watching this video, because I think it's really important that you get good entries in your trades. You're not just like, here's a liquidity sweep, no confirmation, no nothing. You just enter because market might just chop, you know. It may go the opposite of your bias, which isn't ideal if you're trading. No one wants to lose money. So before we get into the charts and I explain a few things, I just want to say why I'm making this series. It's just to help everyone who is a beginner trader or who might be more tuned into trading, who already got started but has some difficulties. So you could watch like parts of the videos which interest you, but you can stick around to the whole series. I will be making one video per day. That might be me making like 5 videos a day and just publishing it on different dates. But yeah, I have finals really soon, which I have to study for and shit. So yeah, I gotta make that. Get into university maybe. I'll try my best. But yeah. So what is trading? I guess a lot of people don't even know what trading is. So trading is just you buying or selling an instrument of your choice, which could be government bonds, it could be indices like gold, you could trade cacao beans, wheat, whatever. You could do forex, you can do futures, and basically all of these are just different instruments and kind of a price at which a stock moves, or like an ounce of gold moves or a kilo of gold. I think it's an ounce of gold for gold forex, like XAU USD. With forex you have pairs like GBP slash JPY maybe. It's just the British pound against the Japanese yen. So if the price of the British pound moves up, the Japanese yen is going down, so you can like trading it the opposite way, and you can switch it around, like you can do JPY here and then GBP here, and if GBP is going down, then the JPY is going up. But yeah, for futures you have Nasdaq, like US 100. You also have the S&P 500, and these are just like a lot of stocks meshed into each other, or it's like one big package for you to buy. That's why they're pretty expensive. One stock, like a full stock of S&P 500 is around 5.6K or something like that, and like one whole stock of Nasdaq is around $90,000 right now. You could also do crypto like Bitcoin slash USD. So Bitcoin is going up, USD is going down in terms. I think this is the very basics, and let's get into the charts, I guess. Okay, so now we got the S&P 500 loaded up right here. You can see the market is currently live. It says market is open for an hour currently, and this is basically the market. So you can see the price of one share of the S&P 500 is $5,530. It could go down to even like $5,000. It was up around $6,000, I believe, at some point. Yeah, it was all-time highs of it was $6,000. And if you want to invest long term, this is a really good option. This usually has around 18% in annual returns. But yeah, so what kind of moves markets, I guess? So a market, so the market is moved by big institutions such as banks like JP Morgan, um, also like Goldman Sachs, which is like a financial institution, um, other banks in basically every country in the world. Your own personal bank is also trading, most likely. Also, hedge funds, which is basically an institution which you send them your money and then they will basically watch it for you and they will try to make more of it by trading. Um, Big institutions trade with algorithms usually, fundamental analysis, also technical analysis. Um, so yeah, the work is usually done by quants, who are like quantitative finance specialists, and they are basically like the top 1% of traders, or even less than that, like 0.01 or 0.1%. So they are basically the really smart people that these agencies and institutions um, use, I guess, to do their trading for them. Um, where does these institutions trade? You have the New York Stock Exchange. You also have a stock exchange in London. You also have one in Sydney and one in Tokyo as well. So markets are usually open for 24 hours a day, or 23 if we want to be specific. There's a 1 hour gap, which is for New York Stock Exchange. It basically shuts down from 5 to 6 p.m. So yeah, but New York session opens, the time frame which people in the New York Stock Exchange actually trade. It happens at 9:30 New York time, which is UTC -4. We can translate that into your own time zone as well. You can see you can do it on basically every broker. Um, oh, yeah. So brokers. What are brokers? You trade with brokers. So back in the days, you traded like you were in the stock exchange. You had like a piece of paper. You rolled the stock on it. There was like a form that you bought it, and then you had to like send it up, and people filled that order in for you. So your order was live. But today, brokers do basically everything online. So you go to a broker, you send them your trade, they will fill that trade in for you, connect you to the live market with regulated firms, and then that basically is your order getting filled. There are also firms which kind of trade against you. So if you take a buy position, they will do a sell position. So if you lose, they win, and then they also keep the fees that they charge you. But brokers who use the A-book model, I guess, are brokers which connect you directly to the market, and they make their profits because they take a fee from your trade, which you basically pay them every single time you place an order. So yeah. Okay, let's get into what we can see on the charts. So we can see these little red and green boxes with kind of like wicks. So these are called candles, and they are basically um, they're showing you price change in the market. And for even like a small candle here, this red one, as you can see, which kind of is shaped like a hammer, that requires multiple tens of millions of dollars to move. And one bigger candle, which indicates price movement, can take up to $1 trillion. So JP Morgan, I think, manages around $1 or $2 trillion per day. So that's how much money or liquidity is flowing into the market. So now we saw the candles. I just need to explain to you what to look out for in candles. So the candles have a wick. This is the smaller green or red part here. And then you can see the wick right here. And then this is the body of the candle. and this was just basically price started from right here, the bottom of this candle, I mean the top of this candle, and the bottom of it started here, and then price just went down a bit, which is what the kind of wick indicates, and then it also moved up a bit, and it didn't close there, so this candle closed right where the top of this candle is, and then usually candles continue just basically like this forever and ever until the market is alive, basically. So I think we got everything out of the way. I just want to tell you that I will be checking the retention time on this video, and I want every single person watching this to grab a notebook. I'll show you my notebook. So this is my notebook. I journal everything in here that I learned about trading when I first started my journey. I journal my trades in this every single day of what I entered, how much profit I had, how much loss I had if I lose. And then I also do my daily journaling if I went to the gym, uploaded a video, or traded, and how healthy I ate. So these are all habits you can pick up. But I think you should start by just, having some form of content written down into the first page. You can see this was like 2023 when I started learning about candle patterns, but I don't really recommend anyone to do that. You're better off with smart money, actually, and you don't want to waste your time. So just get a notebook or a textbook or an exercise book, whatever. Get a pen and write everything you learn from my videos, from outside sources, whatever. And if you want to make it into like a document online, you can also paste the raw text from that into the comment section, so people can go back and watch or check what they learned from the video, so they can do like, okay, maybe we learn about fair value gaps. You're like, fair value gap means this, you tick it, and then how it works. You can, if you understood it, you can tick it. And I will also give you guys homework to do every day. Plus I will also upload psychology videos on how to not be kind of emotional if you lose a trade. It's also important to not be emotional when you win a trade, because that can really mess up your whole psychology. So I think these are the basics, and this was the introduction to Smart Money Trading Grounds with me, Theo, and I will upload a video every single day, I promise. And I will make this as long as you guys want to. Leave a comment, or you can DM me on Instagram or on Discord, whatever. I also have a community which I'm trying to help people trade better. I host live calls every single day. It's completely free. I probably won't make it paid for like over a year. So that's a really good opportunity for most people, because I don't know a lot of traders who offer their Discords free without charge, and they can actually talk to you one-to-one. But yeah, so this will be the wrap of today's episode. I'll see you guys tomorrow with episode 2, and we will start learning about how the market actually moves and what trends are. And I'll see you guys in the next one.